Alrighty, welcome everyone. It has been quite a week of crypto, and we've got a ton to get into. Welcome to those of you who are watching for the first time. For those who are regulars, thank you for your participation and viewership. As always, there is quite a narrative that has been built this week based on returns that we have really not seen the likes of since March in terms of percentage returns. This is the breakout that many patient bullish traders have been waiting for, with several explanations as to why this has happened. And we'll get into as much as we can on the sentiment, the on-chain activity, and whether this can continue, and try to answer your questions as we always do here on these calls. So make sure to leave your hot pressing takes in the chat. Let us know what you're thinking, what we can answer, and we'll try to get to as much of it as we can today with a look at the assets you're interested in, as well as the special questions that you are dying to have answered by the leading crypto analytics platform out there right now. I'm your host, Brian, and we may or may not have an appearance by our founder, Maxim, but by all means, let me know what I can do for you, and we'll cover as much as we can between now and the top of the hour. So with that said, we won't be doing direct investment advice. I know many of you, of course, are going to want to know, is this the top? Do we continue to invest and watch our coins continue to climb, let it ride? It's difficult for us to say, even with probabilities going one way or the other. So what we're going to do is kind of look over the likelihood of a rally continuing based on historical metrics and seeing, what the current market conditions look like now and how they have compared to the past, and whether rallies have continued then or come to a halt and tops have formed, right? So let's take a look right now at how price returns and how social volume has kind of played out here during one of the best return weeks we've seen in a long time. Bitcoin, we can see, jumped over 20% over the past week, and that is one of the lower, maybe mid-range bars on this screener here. We can see several outliers. Solana had a very good early start to the week, started to kind of blend more into the rest of the market caps as the week went on, but still up plus 33%. Chainlink, a huge run, up 50% over the past week. Matic here at plus 26. A few other outliers I'm seeing: Unlimited IP up 38%. Hex, a huge story, plus 132%. The only one in the top 100 I see that has more than doubled in market cap. Makes a little bit of sense considering Hex had actually been getting pretty hammered in the weeks prior, especially in September. It was not a good month for Hex, so it is making up ground now. Aptos up 32%, Injective up 42%, Thorchain plus 45%. And those are just some of the notables that we've seen over the past week in just a massive recovery week that many have been salivating for a long time, right? And a lot of people are still kind of ebbing and flowing on their sentiment in crypto based on what's going to be happening with these ETFs. BlackRock and iShares being delisted from the DTCC and then re-added back. Of course, the overall puzzle of ETFs is all about whether there's going to be increased exposure. That's the thing that people really think is a positive with ETFs. People who are not comfortable with investing on regular crypto exchanges or owning actual real crypto can still invest in crypto and the price fluctuations of crypto through these upcoming highly anticipated ETFs. It's not really a matter of if it'll happen, it's a matter of when. And there has been a level of prices getting baked in with the anticipation that ETFs can be officially approved by the SEC and listed for all to use in the near future. Of course, at the beginning of the week, there was a massive spike in prices due to Cointelegraph, a very reputable and still respected publication out there for crypto, falsely stating that an ETF had been approved and that the SEC is going to go forward with iShares. And that, of course, did not end up happening. There was a spike to 30K on anticipation of that, and then it quickly fell back down. So the narrative instantly became kind of FUD-like, where many people decided, okay, this is exactly what I'm talking about. Crypto always has its fake news. Can't believe we got our hopes up. See you back at 25K. And of course, that assumption was wrong, and prices then rebounded without any ETF being officially approved by the SEC and jumping all the way above 35K to a high of 35.1K yesterday, the highest price Bitcoin had seen since May of 2022. And for those who remember, May 2022, a lot of people were really unhappy with the fact that prices had fallen down to 35K after being as high as 68K just 6 months prior to that in November 2021. So it's funny how things have come full circle, where the same price threshold that we saw a year and a half ago is now one to be celebrated compared to then, when we were kind of free falling and prices were kind of falling off of a cliff at the time. So euphoria, as you would expect, is quite high right now. We started the year, for those who don't remember, way down in the 16 to 17K level, which we've now more than doubled in terms of Bitcoin's market cap. Prices had fallen, which we now know, due to some heavy manipulation of the markets by the FTX owners, Caroline Ellison, as well as, of course, Sam Bankman-Fried, the official owner. They were big, I guess you would call them conspirators in keeping markets suppressed. And of course, their exchange imploding may have actually been one of the best things for the markets, since they were really controlling crypto and creating a lot of fake volume, which they've now admitted on record. This is not a conspiracy by any means, or a presumption. This is the truth, and they stated so to the U.S. judges as their lawsuit continues here. So with that said, I mean, we're almost a year in. It's crazy to think, especially here at Santiment, where we cover the news every day, that implosion happened almost a year ago. It'll be coming up in about 1 to 1.5 weeks, the anniversary of FTX collapsing, and here we are, more than double the market caps that we were seeing a year ago. So the question, of course, now is, what's next? Does Bitcoin have a legitimate chance to climb to 40K and even beyond 40K by a few weeks from now, by the end of the year at least? 2024 certainly sounds very realistic. I don't think anyone would, bat an eyelash when it comes to 40K and beyond in 2024. But based on the pace we're on, some people are calling for it by the weekend or by sometime next week. And we'll look at some of the nitty-gritty stats here to really try to answer that question and see how realistic it is. Of course, before we jump away from the screener page, I want to point out the overall market cap only up about 11.4%. So it is kind of top heavy. Lots of high and mid-level market caps have risen, and screener volume is up big at 28%. Let's jump over to social trends now and take a look at some of the hot topics. Surprising, I mean, it was pretty relevant a couple days ago, but surprisingly, things have kind of settled down to be more obscure topics now. We see CSV as a hot topic on Reddit in terms of distribution of karma points. That's the most rising topic in crypto right now. according to percentages. POL is related to cryptocurrency contracts now live on the Ethereum mainnet and having to do with Polygon's Matic. Label Foundation is kind of a one-off topic about how LG has formed a huge partnership in the Web3 industry. And we can even see Pepe here. This is the first asset we see, and it's trending because it's been mentioned in several tweets promoting the exchange PondX. But more importantly, Pepe is trending because the coin has been really surging, as has been some meme coins. We'll see if we can get into that while we have time today. Gala, you can see one of the top gainers, 25.58% increase. I think that was probably just over a 24-hour period. It's up far more than that when you look at the past week. And then, of course, 35K, right? This is something I wanted to highlight. The amount of mentions of the big psychological support or resistance level, if you want to call it that, for Bitcoin. And we saw the same thing with 30K as BTC was dancing around that level last week. This is an important one, and probably the biggest one to really watch, to see that measure of euphoria versus doubt in the markets right now. When people believe that prices are going to go up, they're going to be talking about 35K a bit more often. When they think it's going to fall back down, you might see more mentions of 30K. It seems pretty natural. And when we look at the frequency of 35K here, and I'm going to add 30K to it in just a moment, you can see how 35K has kind of jumped as price tops have occurred. Of course, 35K is going to be mentioned the most as Bitcoin's price crosses that threshold. But you can see how quickly prices tend to jump down as that price threshold is mentioned on social platforms. Not just the first time it crosses, but you can see right here this second run at it when it went above 35K. Big mention once again, and that prices have kind of topped out ever since. So you better bet that if and when we run up to 35K again, which we're of course still very close to, the likelihood of Bitcoin bouncing off of that and coming back down may be dependent on how much people are actually mentioning that threshold. So we're going to be hoping that 35K is kind of something that people can shrug off and say, yeah, we've been there and done that. And the euphoria kind of calms down, right? Prices tend to climb when euphoria is kind of tempered. There's a lot of doubt, kind of like what we saw with 30K, right? We saw 30K reached for the third or fourth time with that fake news going on related to iShares being approved by the SEC. And by that time, a lot of people were going like, oh, I know this pattern. 30K gets hit, and then it drops back down to the 27, maybe even 26, sometimes 28K level. And then that presumption gets broken with this huge surge all the way up to 35. So if a lot of people are shrugging and going like, oh, every time it gets to 35, it's an easy sell opportunity. That's the way markets work now. I'm just going to keep setting sell limit orders every time it hits 35. That's the time when you really want to be ready for a run to 40K, because the market narrative has shifted to 35K being a top signal every time it gets hit. So if we add 30K, you can see some further evidence of how that euphoria tends to work. 30K was starting to be talked about a little bit here, got a little more run as it happened right here. And look at how these two spikes, it's not that easy to see, but 30K was really mentioned the most as it happened. And then again here, and on both cases, there was a slight retrace. And then when people stopped talking about 30K, the pattern continued upward. You can tell that it's a bullish, euphoric type of mention, because even going way back to early August when people were talking about 30K. There was a little retrace here. Prices went down here. Prices went down here. That was kind of flat, not as big of a spike. And then prices went down here. So generally speaking, these price thresholds are ones that are going to likely cause, when mentioned a lot, they're likely to cause retraces, and you should keep that in mind. I also want to note buy the dip, which there have not been many of lately, but you, even on these little dips here, when you see spikes in them, if there's a huge contingency of people who believe it's time to buy the dip, that usually means it's not time yet. When you don't see many mentions of it's time to buy the dip, like right here in mid-October, that actually turns out to be the perfect opportunity to buy the dip. So if you see prices retrace, which there will be a moment over the next week, it's not just going to look like this forever. There will be some moment, even if it's a very minor dip. Pay attention to whether you see spikes that look like this or even this, or if there's almost just no mention of buy the dip. You'd prefer the latter. You don't want to see a lot of people thinking that it's time to load up because maybe they're worried that it's going to retrace all the way back down to 30. But if you see, a small dip down to 33K, and suddenly you see a huge, massive bundle of spikes like this, that is a concern because people are still euphoric and have very little doubt that prices are going to rebound back up. All right, so that's a little bit on social trends here. Let's look at a few of the top stories here, and then we'll get into a live look at Bitcoin's on-chain analytics and some other ones. One thing we highlighted just yesterday was the massive amount of network growth that we were seeing among many market cap assets. These are some of the highlighted ones that our asset activity matrix, which we'll show in a moment, was picking up for assets like Axis, Decentraland, Phantom, Injective Protocol, Polygon Matic, and even stablecoins like DAI. You can see Pepe there too. Big network growth spikes indicating that there were new addresses being created for all of these large to mid cap assets in crypto. That's a great sign. It means that these pumps that we've been seeing for all of these different altcoins were actually happening fairly organically due to new addresses occurring. It wasn't just prices jumping due to algorithms, redistributing all of the Bitcoin profits after it went to 35K. This is what looks to be a pretty organized pump with new addresses coming in from all over the place on many different networks. That's what you want to see when it comes to prices rising and deciding whether or not these kinds of rallies can continue. Of course, these are hand-picked assets. These are just the ones that are seeing the largest spikes. So understand that if the asset you're tracking isn't one of these 10, it likely isn't having quite as much network growth. But overall, the narrative and the trend is that many of crypto's assets are seeing boosts in terms of address activity and overall amounts of new addresses being created right now. Some other stories that we highlighted. Check this out. This is a big, big deal. Whale transactions. These are the amount of transactions classified as whale moves, aka moves that are valued at $100,000 or more based on the price of the asset when it's moving. So Bitcoin at the time was up 20% in the past 7 days. Of course, actually, I think it's still up about 20% in the past 7 days, even about 20% 1 day later. But look at how whale transactions hit one of their highest levels of the year, easily the highest in the past 3 months. Just 2 days ago, this was October 24th. Ethereum, easily the highest in the past 3 months. Cardano was also the highest in the past 3 months for you ADA fans out there, and even DAI, which I just mentioned as a high network growth uh, beneficiary, it's getting a big uptick in whale transactions as well. So not just new addresses being created or higher address activity is happening. There are major key players that are looking at these higher levels as an opportunity to begin engaging again. You may be worried, oh, they're profit taking here, they're selling, and that's why the whales are engaging more. Yeah, that's partially true. Naturally, when you see 20% to 50% returns in 1 week, you're going to see a certain amount of levels taking profit because this is not normal. This is something you don't see often, and they're naturally going to engage more and contribute to the volume that's going on. But generally speaking, whether it's for buying or selling, more whale activity is a good thing because it means that circulation is increasing, and utility is one of the biggest factors in whether any market cap can have long-term growth. So we'll look at this more in a moment in terms of the context of what the supply distributions are looking at right now, whether whales really are, buying more or selling more for some of your favorite assets. Of course, Bitcoin will be the biggest focus. We also looked at Ethereum a little bit, which just had its lowest supply and exchanges reached since Genesis, since its opening week/month of existence back in July 2015. Only 8.41% of the ETH supply is now on exchanges. Bitcoin looks pretty similar. It's at its lowest level since 2017. And we also can see that the amount of whale transactions here jumped to its highest since April, with 6,449 whale transactions happening on Tuesday, October 23rd. Another one, bullish versus bearish narratives going on. This is another look that I really like, which is the amount of keywords that are synonymous with people being bullish versus keywords synonymous with people being bearish. The blue would be the bullish takes, red is the bearish takes. You're actually, if you're a bull, you're rooting for the crowd to have more bearish red takes here, which we saw going on beginning on the 17th. And that kind of was when we really started to break out, give or take a couple of days. Lots of people mentioning the word sell or sold or topped or bearish. And about 24 to 36 hours later, that's when we started this big ascension here for all of crypto. You can see on the 20th, after the rally had started, right at this peak, I know there's a lot of text that are covering it up, but you can see this blue spike right here, causing a temporary top, maybe like a 2% retrace for Bitcoin happened right here. And then after that quickly calmed down, you can see the bullish narrative quickly dissipated. That's when we just skyrocketed up to 35K eventually. Since that time, you see a lot more euphoria, which is understandable. 35K hadn't been seen in almost a year and a half. So lots of people calling for 40K and bullishness, and they're buying up here. We did see a brief red spike coming in, and both have kind of neutralized now. We can actually take a look really quick at the live bullish versus bearish sentiment to see if things have changed. And it's pretty neutral. If I put on shared axis, that's probably better. Yeah, both have kind of died down. Not a lot of bullish or bearish takes yet. Friday, especially here in the US, as work starts to get off in about 6 to 7 hours, you'll see some sort of increase in volume, as we typically do every week around that time. And then you might want to check on this chart, which is linked to that tweet from just a couple days ago. If you check our Twitter, and you can see whether there's a little more of a bullish or bearish narrative forming heading into the weekend. You want to see a higher red spike as a good sign that we can climb if people are showing some doubt. A blue spike if people are getting a little overly anxious and thinking that prices are going to climb, which would be a bad thing. One or two more stories I wanted to highlight. Look at Bitcoin here, and we'll take a live look as well. But whale transactions, obviously, we covered that. Big spike. Active addresses, huge spike, biggest in about 3 weeks, but nevertheless, that's very important to keep an eye on. And then dormant activity. This mean dollar invested age line is very important, and we'll look at this in more detail. But the average age in which coins were sitting in wallets dropped down pretty significantly during this move to 35K. And that is one of the big keystones to a bull run beginning. We'll need to see more, of course, but if this line continues to drop, it would essentially be a validator for those wondering if prices can continue to climb. In every bull run we've seen historically, we've seen dormant coins moving significantly, causing the mean dollar invested age line to drop. And that would be the validator we're looking for. So let's take a look at the live on-chain metrics now for Bitcoin and really see what's kind of developed here. And then we're going to look at the activity matrix. Some of you may have seen the article I put out yesterday that really explains how it works, and I'll briefly highlight that as well. But don't worry, I'm going to make a full-on video about that activity matrix model, so you have a very good grasp of how to use it, why it's important, and how you can make more informed trading decisions to boost your profits using that matrix as well. So looking at transaction volume, big spike here on the 24th. This is where things were really kind of topping out. The amount of USD transacting just on the 24th was 16.88 billion. That's a big rise from something like a typical day of maybe half of that, 7 to 8 billion, as we were seeing earlier in the month. Trading volume obviously up, maybe not as much as you would think, other than these 2 days when there was a ton of trading volume. It's kind of fallen back to earth now, still a little bit higher than usual. But if you want to see a rally continue, you typically want to see trading volume continuing to rise, and it has started to come back down. So, you know, the rally is, at least if it's going to continue, it's not happening due to overwhelming trading volume going on the BTC network. Daily active addresses, kind of similar. We're seeing 3 straight days now of well over 1 million daily active addresses, when the average sits more like 940 to 950,000. So about 50 to 60,000 more daily active addresses happening on the network right now, which is of course very good. Circulation had its highest level in about 3 months. Let me see if I can get that to load while I'm talking, and I'll check back on this in a couple of minutes. So yeah, daily active addresses and circulation up. As you'd expect, utility is up significantly due to the fact that prices are at levels we have not seen as a community in a long time. So people are engaging with that. Now, something to be aware of, this is one of the best bearish arguments if you're expecting prices to come back down. MVRV, the 30-day average trading returns, jumped to its highest level. We got to go back about a year here. Give it just a few seconds to load. I believe, yeah, it's even longer than I thought. So MVRV 30-day, this is the highest it went to since January, where we saw a temporary price stop, but that didn't last long. Of course, January was a great time to be investing because prices were just soaring. This was one of the biggest rallies we've seen since January. Arguably March as well had a similar rally to what we're seeing. But average trading returns, usually when it gets to above 15%, which it did 3 days ago, that's when you typically see retraces. 30-day returns have fallen a little bit. They're just below 15% right now at 14.8. That means we are in a bit of a danger zone, not quite a historic one though. But understand that every percentage point that the 30-day returns are above 0%, that is that implies a higher risk when you are adding on to or even just holding your Bitcoin due to retraces being a bit more likely. 365-day returns have actually gone to its highest level in over a year. If we go back to 2021 here, we're actually including the all-time high now that happened in November. MVRV can take a while. Let me just put it at 1 hour. There we go. So yeah, the one hour frequency for 365-day MVRV shows that 33.8% was the highest we had been at since the all-time high month in November of 2021. And of course, prices were really plummeting back then. It doesn't mean that's going to repeat, but generally, when long-term trading returns are this high, we have to be a bit aware of the fact that prices may be seeing a temporary top, because you don't typically see average returns going plus 40%, plus 50% for any time frame for the largest crypto asset by market cap. So both 365 and 30-day average trading returns are sky high right now, arguably more so for the long term 365-day. We'll need to see that come down eventually in order to justify further price rises in the markets. And of course, the reason Bitcoin is important to look at is because this is reflective of all markets. If Bitcoin starts to retrace back down to 30K, that means it's going to drag down other market caps with it, regardless of where their MVRVs stand. Now, we can look at the model to look at everything together, and we can see that pretty much everything is in yellow, orange, and red. There are a few exceptions. Loom, which was really pumping incredibly high before the rally, it has been one of the biggest losers over this past week due to the fact that its pump had already happened in early October / late September. So it's actually semi-underbought, while most other assets are in semi-overbought or overbought territory. You want to really try to avoid the ones that are past this danger zone dashed line here on our model, which, by the way, this model is available for anybody. Just ask us on Discord, and we'll be happy to set you up with it, give you the link, tell you how to load it anytime you'd like to see where these assets stand in terms of their risk based on average trading returns. So some of the biggest danger metric or assets right now are Blue Zell, Fetch, Injective Protocol, Merit Circle, and those are the 4 that are below the danger zone on our model. The ones that still have an opportunity are Loom, Serum, Super Rare, and Vibrate. Everything else is kind of in between, with the general average being semi-overbought for most assets right now. So this is pretty much as expected, pretty normal for what assets are going to look like after we see this kind of rally. Maybe not as bad as you may think, though. I mean, most assets are not in the danger zone or even close to it now. They're mostly in semi-overbought range. Because if you remember, if we're talking just a couple of weeks ago, or especially in September, altcoins were getting pretty hammered compared to Bitcoin, which was staying afloat well. So the narrative has kind of shifted from how long can Bitcoin stay in that 26 to 29K range to how high can Bitcoin go and how much can it prop up the altcoins now that it has surged. Generally, when you see a big surge like this, it goes, Bitcoin traders profit, and then they use those profits to start trading into more speculative assets like meme coins, like you see Pepe really pumping right now. Harry Potter Obama, with the ticker Bitcoin, that one has really been surging as well. So there's assets that may not have a ton of long-term blockchain future technology innovations in it that are getting a ton of pumps right now. And that's actually pretty normal after you see Bitcoin go on a run and start to have that money get redistributed to other assets out there. All right, so going back to Bitcoin's on-chain and social metrics here, we can see funding rate actually has not been too bad. Nothing crazy like we saw back in November of 2021 with huge funding rate spikes. If we zoom in, get a better look, I mean, we are seeing the highest since August here. There are definitely more people longing. Look at how as the rally was commencing, people were shorting heavily. They did not believe that prices would continue to go up. And that, of course, just added rocket fuel to the prices eventually going up. And liquidations happened right and left here. This was around the time of the Cointelegraph tweet that the SEC had approved the iShares ETF. So over $100 million worth of shorts got liquidated around here. And eventually they've turned into more longs. I still wouldn't call this an extreme level, but you do need to be concerned over the fact that the narrative has shifted very bullish in terms of where people are putting their money where their mouth is now. We mentioned whale transactions already in our tweets. We won't go further on that. We'll touch on supply distribution in a moment. We'll also touch on the ratio of on-chain transactions and profit to loss. And here's what I was talking about earlier, the mean dollar invested age line. So this is the past year. Let's go to the last time it was really dropping so you can get some context. So this was late 2020 when you really started to see prices going nuts. This was about 6 to 8 months after COVID first hit the mainstream consciousness. Prices were at 13K back then, got all the way up to a little over 64K, I believe, was at its peak in April. And look at how the mean dollar invested age line, this yellow line, was just dropping off a cliff. There was also a huge age consumed spike, which is calculated by multiplying the amount of coins moving during one interval of time, multiplied by the age in which those coins had been sitting in those wallets. So huge amount of dormant movement all at once really kind of validated that a bottom was forming and prices just took off. One of the biggest we've seen since was in November of 2022. This was a couple weeks after FTX collapsed, and this was a perfect bottom marker, which you would have been very happy if you entered during these age consumed spikes. Prices have more than doubled since at plus 105% for Bitcoin. So what we're looking at now is a mean dollar invested age curve drop. And we are seeing hints of that right now. It's very, very early and too early to really call it. But if this curve starts to do anything kind of like this, that would be a very good justifier / validator that this price rally is not a fluke and can continue moving up to start seeing some massive face melting gains that many of you are rooting for right now. So watch dormant activity very closely. I think it's a good mid to long-term metric that can really help navigate the markets for you if you're wondering whether we're in a bull trap right now or a legitimate bull rally. Supply and exchanges for Bitcoin, bit of an uptick over the past week. Not much though. You can really see just how far we've fallen, going from 14.3% of Bitcoin on exchanges in February of 2021 down to just 5.7% now. That is a good sign, as it means there are less coins on exchanges to be sold off and halt this rally. Social dominance, as you'd expect, has jumped significantly. Let's zoom in a little so we can go post Twitter API change and get an accurate look at social volume. Bitcoin just a couple days ago had its highest social volume spike since that Twitter API change. It's hard to compare to before the Twitter API change happened, but I can guarantee that this is amongst the largest amount of discussion we've seen all year. It's the highest percentage of discussions related to Bitcoin, over 30% on October 24th, that we have seen since July. So this is always a good thing, whether it's for FOMO or FUD reasons. More discussion related to the top cap asset in crypto leads to a more organic pump, and less focus on um, those speculative altcoins that do not actually mean as much to the future of crypto, regardless of your opinions. Weighted sentiment, as you would expect, had a big week. It was actually the most positive sentiment week we've seen since March. So March was when we were seeing a ton of euphoria related to all sorts of stories that were forming. I think it was before the ETFs happened. It was just a pure organic pump that a lot of people were excited about. And of course, the euphoria caused a temporary top. Once people became less positive, that's when we had one final top. And of course, the eventual retrace that resulted in a long stretch of negative sentiment that occurred here. This was also partially due to the Twitter API change, but weighted sentiment is, again, a viable metric. So you can definitely look at whether traders are getting positive, which is a bearish sign, or if traders are getting very negative, which would be a bullish sign. So we are understandably in bullish or euphoric territory, which adds to the probability that we've reached a bit of a price top now. Just note it isn't that extreme. Even though this is the highest since March, we're not seeing anything like what we saw in March or even January, which were much bigger euphoric spikes. Okay. Before we look at the activity matrix, let's look at how the whales are doing right now and how they're behaving. Let's get rid of everything except Bitcoin and Tether. So we'll get rid of USDC and DAI. So Bitcoin's sharks and whales. We saw, oh, whoops, I gotta make sure it's up to date. This is through a few weeks ago. That's better. So we saw a big accumulation happening between October 12th and 18th. So going back to the end of last week, Bitcoin's sharks and whales were holding pretty much their highest levels since August here, and then quickly dropped. But that drop didn't matter too much because Bitcoin just ascended due to crowd optimism about ETFs. Now, the thing to be concerned about is that Bitcoin's sharks and whales weren't the reason that this pump happened. It was more retail traders getting excited about more exposure to Bitcoin, whether it was due to fake news or not. And the iShares announcement from Cointelegraph, we got to 30K, then everyone got doubtful, and then that fake news almost turned into a real rally, or it did turn into a real rally. But sharks and whales have not accumulated much. They did make a lot of whale transactions, which what we can see now, that signals that it was a lot of profit taking going on, not a lot of accumulation going into the rally. On top of that, the largest stable coin in crypto, Tether, is not being accumulated. It's actually going down as well. So my big concern for bulls is that both Bitcoin and Tether holdings are going down over the past week as prices went up. It wasn't Tether being exchanged for Bitcoin. It wasn't Bitcoin being exchanged for Tether. Both Bitcoin and Tether went down, which implies that either the money went into altcoins or it went into fiat, and there's just some overall money being taken off of crypto right now and just being pocketed for other reasons that sharks and whales have for their real lives. We don't want to see that. We want to see more money being pumped into crypto constantly. And if Bitcoin and Tether are not moving up after a rally, that means that a rally could be coming to a quick halt due to the lack of support from key stakeholders. So not the best argument there for bulls that this rally can continue. Doesn't mean it can't, but if it does continue up to 40K, it at least is not happening due to what the sharks and whales are doing at this moment. We talked about social dominance being one of the biggest spikes we've seen all year. That's good to see for the social aspect of Bitcoin. We talked about funding rates already. we did see this temporary spike. So this looks at the overall average for Ethereum's funding rate, and there was a huge amount of longs. Let's go back a little further. Last 6 months, last year. There we go. So the last time we saw Ethereum's funding rate get this high was way back in February. You can see that when these funding rate spikes get high, prices do not go up too much. They tend to top out if happening during a rally. So Ethereum, it is coming back down a little now, but avoid being in assets when you're seeing huge amounts of longs going on. If you can keep up with the average funding rates going on, you can profit pretty heavily on shorting or longing by going against the grain of whatever the trend is. So theoretically, you can short more successfully when there are big long spikes like this, and long more successfully when you see big short spikes like this. This would have been one of the best times to open up a long and invest traditionally in crypto. Bitcoin, as we mentioned, not a huge amount of longs, but it is starting to move up to that long bias side. So keep in mind that we are seeing a bit of FOMO going on, not a severe amount, but enough to be mildly concerned. Okay, so we've talked about plenty of on-chain metrics for Bitcoin now. We looked at the social aspect, we looked at social trends, and what kind of topics are driving markets. One final thing, just to look at trending tokens now as we open up a conversation about altcoins. The token buying.com, huge positive sentiment, actually kind of polarizing, if anything. There's kind of an equal amount of positive and negative sentiment, but regardless, it is the top trending token in crypto according to percentage gains. Gala right behind it, seeing a big pump right now. Meta seeing a large pump. AMP, Doge, Matic, GRT, Floki, Litecoin, and Injective round out the top 10 here. And if you're interested in seeing the context as to why that asset is trending the way it is, you can just open up the AI summary. And our AI bot is doing a better and better job every day of really concisely summarizing why the token is such a hot topic. In the case of buy, it's funny because this is actually synonymous with the word buy, so it can be a bit misleading. I'll just go to the number 2 topic to make it easier. The word Gala is trending because of it's one of the top 5 gainers on Wazir X. The price increase of 26%. Also among the top 5 coins by alt rank from Lunar Crush, one of our competitors, and Bitcoin dominance at 54.2%, and Fear and Greed Index at 71. So it just looks like there's a big social volume influx related to Gala, mostly due to its price increase that has already happened. Now, that's a perfect segue into our activity matrix, where we want to look for assets that are getting heavy network activity without the pump happening yet. And that can be a very difficult thing to answer when you're looking at each asset by itself and kind of doing a methodical walkthrough like we just did for Bitcoin, looking at a bunch of different metrics. This makes it much more simple to do because you've got 114 of the most popular assets that Santiment has data on. They're mainly ERC20s, but we've also got Bitcoin, Litecoin, XRP, Bitcoin Cash, Bitcoin, Binance Coin to an extent, but very few. So I left Binance Coin off of this model. But in short, what you want to do here, I've got the detailed tab open, and you want to look for assets that are getting mostly orange and red boxes, which of course almost all of crypto has right now because it's seeing near 3-month highs in several categories, no matter what asset you look at. Some of the most hot, Chainlink, for example, look at the massive spikes in active addresses, network growth, whale transactions, social dominance has been up, mean dollar invested age, that curve we were talking about, when that goes down, not up, That's when these red boxes will occur, telling you that there's a bullish divergence showing there, and even age consumed showing there's a lot of dormant tokens moving. So Chainlink has been a big standout, not surprisingly, up 48% at the time of this recording over the past week. If you want to look at price percentage returns, by the way, it's conveniently laid out for every single asset as the 1-day change, 7-day change, 30-day change, and 90-day change from left to right. Ideally, you want to look for assets that are getting lots of red and orange without going up. So, for example, power has been going up significantly over the past 7 to 30 days, as we can see here, but it's dropped 32% in the past 1 day. So it's seen a huge retrace just in the past 24 hours. That means there could be an opportunity there. If you really want to ride the wave of volatility, there could be some bottom signals forming. If you then open up power on Sandbase here, if I can open up a fresh template really quick, which you can just do by clicking on this arrow, clicking reset layout, and then going to power. And let's say I want to just look up, yeah, look at that crazy spike there. Let's look up some of the main metrics, which I have on a saved template. Huge spike in transaction volume. If we just zoom into the last month, just ascending day over the past week in terms of most of its on-chain metrics. I'm checking to see if there would be any sort of bottom signal forming. With the price sitting at 24 cents, we can simply look at the million to 10 million tier. And yeah, we can see that the whales are staying pretty high. Therefore, there could be a signal that power could have some argument to turn around again and go back up after its 32% retrace. So that's what you really want to look at, is the hot tokens that are seeing a ton of network activity, while the prices have not reacted compared to others. The price colors, by the way, are relative to all the other assets going on. So plus 4% in the past 24 hours, you can see that that's highlighted in heavy green here, meaning that even though 4% isn't a ton, it is for compared to most assets just in the past 24 hours, because most assets have started to top and flatten out or gone back down a bit. You can see Teller down here leads the way in 7-day, 30-day, and 90-day changes. It's up over 800% over the past 90 days. Absolutely nuts. So you can really look for the ones, if you're trying to find a bottom or an opportunity out there, look for an asset that is down a lot over the past compared to other assets over a 1-day or 7 or 30 or 90-day interval, like Kyber Network, which is seeing a very large amount of active addresses, network growth, whale transactions, mean dollar age. This is not investment advice by any means, folks, but this is the best way to really use this kind of model. Look for the assets that are seeing high activity, but not high price returns yet, right? That's the name of the game. And if you want to simplify it, and you don't want to look at this massive layout of different colors that's conveniently laid out for you all on one screen, you can also look at the anomalies view, which is the same. You can see everything is identical here, the same layout, except the colors are simplified to only show when there's been a top 3 day for that asset's metric, or a bottom 3 day, which would be blue. So red is a hot day, blue is an extremely cold day. Anything in between, gradual rises or falls in that metric, they're just going to stay yellow. So it simplifies it and just highlights those big extremes for you, which there are still lots of right now because of the huge bull run, or at least bullish week that we've just had. So that can be an easy way to identify just the big outliers if you're looking for, whale transactions, which is the third column over, where Threshold had a big spike, which is top 3. Or I'm trying to find another one in the most recent day. Bitcoin, of course, just had a huge whale transaction spike that was top 3 compared to its past 3 months. So that's another way to look at it. And then the final way to look at it is just have a straight list view. Don't bother looking at the tree map and all those pretty colors. Let's just see what the leaders are for 1-day price changes, which is relatively tame right now. Magic token up 6% is the highest among those 114 assets. Teller up 89% over the past week. That's the leader over the past 7 days. Teller again plus 149 for 30 days, and Teller again for 90 days plus 804%. And then we have active addresses here. This number here, it's basically ranked by those assets that are seeing the top days going down. So these 6 assets that see a 1, that means all 6 of them have just had their highest active address day over the past year. It's looking at the past full day. And Bitcoin Cash, Fetch, Merit Circle, Power Ledge, Status, and Teller all have just had their best active address day in at least the past 3 months. Same with network growth. You can just look at the leaders for it, which are Fetch, Pepe, Power, and Teller, all seeing a top day in the past day. Whale transactions, plenty having their top day over the past day. This one, which I haven't touched on yet, it's looking at specifically the smart money tier, which we typically classify as wallets holding between $100,000 and $1 million. It's the wallets that are high enough to have an impact on the markets when they buy or sell a significant amount of their holdings, but not to an extreme level where it's probably an exchange address that barely moves. So Aragon is the only one that just had its largest accumulation day in the past 90 days. Let's look at that for a moment. If we switch to ANT, which is the ticker for Aragon, we'll unmerge these for a moment. And let's just look at the 100K to 1 million. Sorry, the price is, it's because it's locked on Bitcoin. There we go. So price for Aragon is at $4.82. So the, it's going to be this one. 1 million to 10 million. So the holders of Aragon that have between 1 million to 10 million ANT, they've been absolutely surging. They've jumped from 39.5% held all the way up to 41% held, which has jumped them all the way back to mid-September. So that's what this model just told us. There was a big uptick in smart money for Aragon, just as there is for Reserve, Shiba, Axie Infinity, Bancor, StormX, Swipe, Merit Circle, The Graph, and Ampleforth. So in case you don't want to pick out those boxes on this chart and find, where the red box is for the 4th column over, 100K to 1 million supply held, you can just look at the list view and find the top 10 for that particular metric. Very convenient. No matter what kind of way you like to look at data, we have it covered, whether it's through looking at just the extremes here on the anomalies tab, looking in detail, looking for those red versus blue boxes, or just looking at the list view. This model has it all. I think it's going to change the way we look at analytics. I genuinely believe that. A lot of blood, sweat, and tears went into this thing. We have an insight that just went up yesterday. Go to insights.santiment.net. It looks like it's already been getting quite a few reads, and it goes over everything you need to know about how it works, how red squares and blue squares and yellow squares look, what the overlay looks like, the market cap ranks next to the names, what the 8 categories are, and what each of the metrics mean. It goes into detail on that and what you should do when you see a red square versus a blue square, typically. The price percentage returns equaling 1 day, 7 day, 30 day, and 90 day. It even tells you how the loading square works and the amount of errors that might pop up, which are inevitable sometimes. How to refresh the page, which can be tricky. And it also goes over the mini version of the model right here. So If you only have a free version of Google Suite, which many of you do, don't fear if you can't load the entire model, which has an extensive amount of data. You can still use the mini one that has 20 of the top metrics in crypto and will quickly just give you a recap on those 20 instead of 114, and that will load in time for you. So that goes over everything. Also, there's a handy guide here that goes into even more detail related to how the model works and how you can use it to your advantage. So with that said, I know I went all the way through the hour. Maybe really briefly, Max, we can go over one question or one asset request if you see the most predominant one in the chat.
Actually, we didn't have any input for asset requests. So if you have
That's quite all right. Yeah, we can kind of wrap it up here, folks. But I want to thank you all for joining for one of our biggest shows of the year. Obviously, it's been a huge week in crypto. Lots and lots of different storylines have popped up here, and altcoins are getting a large amount of attention right now, as you would expect. But keep a close eye on whether Bitcoin's social dominance can stay high, or if some of these meme coins like Pepe and Harry Potter Obama start to take away from that social dominance, and the crowd starts to get euphoric and all this FOMO related to the more speculative assets. That is usually a sign of a top coming. I haven't seen like a pure, like definitive top signal yet, but with MVRVs being very high and some other metrics showing that there's a bit of a peak, we have to be aware of the fact that historically things do tend to cool down when you see a surge like this. It may not happen immediately. We could climb a little bit further to get euphoria really, really at its peak. But regardless, just trade safe and don't let greed get the best of you right now. It might be fun to just pour all of your savings into crypto, assuming that this rally continues. And whether it does or not, make sure to trade smartly and don't over leverage yourself, because I've seen a lot of stories out there where people, get a bit too big for their britches and invest more than they can afford. So be safe with that. Trade with your best foot forward and with wisdom rather than with, the sentiment that you're seeing on social media, which is often the exact wrong narrative. So for now, I wish you all the best. Enjoy your weekend. Stay safe. And we'll talk to you next week, where I believe we'll have Maxim, our founder, back with us. So talk to you all then. And I'll be on Discord if you guys have questions, along with the rest of our team. Take care. And Balresh, thank you as always for running the stream. Bye, guys.